Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be analyzing the 18th Commitments of Traders Report of 2022. And as we always do, we shall start off by looking at the largest changes in commercials positions. But before we jump to the review, just a brief reminder for those of you who are just joining here at COTBase.com, you're going to find a lot of educational material, not only in written format, but we have some very, very useful videos as well that will help you guide you through the analysis process, explaining to you all the tools there are that you can use to analyze this wonderful data. Back to the review and starting off with our first market, cocoa, where we have a 24% change in commercials net positions. So we're talking about commercials. And of course, they are represented with this red line over here, and this is indicating their net position. So obviously, all the shorts subtracted from long positions, and you should receive this net position. They are roughly at 40,000 contracts net short. You can see large speculators around 34, and you can see small speculators around 7,000. Some of those should equal to 0. This recent change size can be witnessed here. It's easily visible that it is greater than average. It is a bearish COT change signal coming after a decline this week. So the signal could be a little bit late for us to act upon. If we move our attention to the 5 years chart, you can see that we are a little bit leaning towards the bearish side of the market extreme wise. So it's not that obvious, to be honest. I would consider this analysis of the Commitments of Traders Report of cocoa to be not the most helpful one. So I think this is a good example for this kind of analysis as well, when you just say, hey, there's not much to see here. Let's just move on and have a look at other markets. And that's exactly what we're going to do. Let's see if there's anything more precise and exact in the case of lean hogs, where we can witness this 24% change in commercials net positions. Now here you can see that it is different. We are getting this bullish COT change signal, larger than average, no question about that, after we have been witnessing this decline in the market. So this change is suggesting lean hogs could bounce a little bit up early next week. Don't forget, these COT change signals are short-term signals. And if we move on to the 5 years chart, you can see that we have an 88 report extreme pushing the market to more bullish territory, especially if we're looking only at the last 2.5, 3 years. Then we can definitely say that. If we'd be going back to 4 or 5 years ago, you can see we have reached much greater bullish COT extreme levels back then. That's just an indication that how far we have left to really reach those all-time or close to all-time bullish extremes. But for now, in the short to medium run, I would say that the bullish COT change signal and this relative bullish extreme is suggesting a turn in the direction of the market in lean hogs. Currency market is the next. New Zealand dollar, to be specific. Here we have a 23% change in traders' positions. Now, for those of you who are just joining in, you might be asking, why is it that we have a very similar change size, but looking at the chart, it's much greater than what we've seen in lean hogs. And that's because, don't forget, COT data and these COT charts, they're not derived from price data. So it's a independent data indicating the how the open interest is divided amongst these major players. So it's a separate data, very useful in that respect. And you can see that as the market is headed lower, traders are switching their positions accordingly, and the market starts to be becoming more bullish, at least from a COT analysis perspective. So of course, even on this 1 year's chart, I'm going to switch to the 5 years shortly, you can see that we can reach greater extremes. So right now, sticking to the change analysis, you can see that since March of this year, we've been witnessing a decline in the New Zealand dollar. And as that is happening, we are witnessing a rise in the extreme. Suddenly we have a larger than average change size. We've seen greater changes in the past. You can see what happened back in December last year, just before we kind of reached that bottom. It was an interim bottom, of course. It did actually continue its trend downwards, but nevertheless, it was a short-term buy signal that seemed to be effective. Here, of course, you can see a bearish example of that. So just showing to you how these change signals can affect the market. There's no guarantee that we're going to suddenly see a rise in the market, but it does suggest that this sudden change, bullish COT change signal, that we may see a bit of a rise coming early next week. Now, moving our attention to the 5 years chart, you can see that we are more or less in between the two major extremes. So you got to go back in time until 2017, mid 2017, to see that beautiful bearish COT extreme signal, which, if you look at the price chart, was actually the highest valuation of the New Zealand dollar against the US dollar. That was a bearish extreme. And then, of course, we reached some significant bullish COT extremes. There was one back over here in October of 2018. We had one in October of 2019. We had a relative bullish COT extreme at the COVID pandemic when it started. And now we are more or less in between those two extremes, headed into more bullish territory, as you may see, as the market is going downward. So, in the medium to long run, I can imagine the New Zealand dollar losing value, continuing losing its value against the US dollar. We are not at not at these bullish COT extreme levels that would caution us otherwise. In the short to medium run, I think this sudden bullish COT change signal may push us a little bit higher in the market. Let's move on to large speculator COT extreme. We have the British pound, the British pound over here, 134 report extreme in large speculators positions. This, of course, is a more significant bullish COT extreme than the one we saw in the New Zealand dollar. So here we would be expecting a bottom to develop pretty soon. We did see, we did see greater extremes in the past. Just cautioning you that we could grow to even greater extremes, and while that's happening, we may see further decline in the British pound against the US dollar. So that's just a warning sign. And of course, these are correlating markets, so you may want to see a greater bullish extreme in the euro and the Canadian dollar, the Australian dollar. And of course, if you got bullish extremes all over the place, the chances of this turning point is becoming even greater. Copper is our next market, 102 report extreme over here. Just in this report, traders commercials moved above the zero line, meaning they're net long again. Of course, there is space left for them to reach even greater extremes. So this is suggesting that as this decline is happening, we are getting signals of a turn upwards in copper. Lean hogs we talked about, so we're going to close off this review with the gasoline market. Here we have 31 report extreme in large speculators, which of course in itself doesn't necessarily mean too much. It just means 31 reports have passed since traders were at these levels. But visually speaking, you can see that is a significant bullish COT extreme, which of course, to those of you who are joining COT analysis, may be surprising since we are at these high levels. This could be that rare case that we call commercial capitulation, when the margin calls hit the commercial sector and they got to close their short positions, driving the market higher. This may be a case like that, because of course, normally speaking, we would be expecting a bullish COT extreme when the market is actually lower. So I'm just showing you a few examples of that. We are still in this bullish zone, even though the market is much higher. So I think that just suggests that we may see this trend to continue. Don't forget there's a lot to do here at cotbase.com. We, of course, are only showing you a few market categories, but you can definitely access much more. And you can dig into your analysis with all these tools that we give you. COT Extreme analysis. You can use the COT index, the COT move index. You can, of course, add the long-term trend indicator. If you're somebody who is trading a few specific markets, we talked about the British pound. You can actually look at the British pound, all the COT report types, data types, and then, of course, dig into your data sets as you would like to. Anything you want, you can chart, you can download. Of course, in the COT Base Pro package that we have, you can even download all of our data if you wanted to. We do offer an indicator in the COT Base Pro package, which can be used in NinjaTrader, allowing you to use our tools within NinjaTrader. It also gives you, of course, access to the website as well. Now, if you're somebody who trades in the more shorter time frame, you may want to have a look at our iCOT intraday indicator, which is basically an indicator developed from a COT analysis point of view. So I'm just going to open some examples for you so you can see these charts very similar to the ones we are used to in classic COT analysis. But this is actually not data coming from CFTC. It is not Commitments of Traders data. It is our own indicator that, of course, is trying to mimic the movements that we are witnessing in traders' positions. But this, of course, is on a much shorter time frame. You can see these are 1 minute candles, and we're talking about the gold market here. I think it's a very useful tool to pinpoint good entry and exit points, and combined with the longer term analysis help that we get from COT analysis, classic COT analysis, I think the two can work very well beside each other. Thank you very much for being with me in this review. I appreciate your attention. I hope to see you in my next COT review. Take care. Goodbye.